Alright, Alhamdulillah. Assalamualaikum warahmatullahi wabarakatuh. Happy Wednesday, everybody. We've got a good treat, a special treat for you today. Adi and I have, gone in a long discussion and we decided, hey, let's do a video for you every day. And if you've noticed, you'll be getting more and more videos. And today it's gonna be something special. We'll be talking about a market outlook. Now, what is a market outlook? If you're wondering what a market outlook is and you've never heard the term before, it's essentially what the view is on the general markets, the investing strategies that we'll use, what's happening in the world, basically, what we call macroeconomic views. So this is me, Chief Finance Ninja at Fast Finance. My name is Afiq. That's my awesome buddy.
Hey guys, RD here from Pro Traders Network as well as Halal Investing Network and on board with Afiq right now.
Awesome. So let's get right into it. I've got some slides here to look at. And so today, where are my slides? There we go. There are my slides. So Halal Stock Hunters, today is the 1st of September 2021. Hopefully a day that will go down in history as the first day we did a market outlook. Yeah. What's happening, yo? What's happening? Today, I'm just going to be talking about three things. Rising bond yields, reopening economies, and then the uneven global recovery. If you're wondering what exactly is a rising bond yield, well, long story short, a bond gives you coupons, gives you an interest rate, right? And when a bond starts to drop in price, the yield starts to go up. What does this signal for us in the bigger picture? When I look at rising bond yields, what it basically means to me is that the markets are taking on more risk, right? Which means they are actually selling off their bonds and buying more into risk-on assets like equities, even certain commodities. What does this mean for you? So if we're looking far ahead into the future, as best as we can, rising bond yields basically means that, there might be a good, uptrend in the markets in general. Now, why are the bond yields rising? Now, if you look at the news, if you've been following the news, you know that the Fed, the US Central Bank, the Fed, has decided to taper off their bond purchases at the end of 2021. What this means is the Fed really is just saying, hey, we're going to stop giving you so much money, right? Slowing it down bit by bit, right? Because we got to start increasing the interest rates. It's not we're going to go into deflation. And, we got to maintain that value of our money. And so the Fed is taking a more of a backseat approach in trying to prop up the economy. And we're looking at what's going to happen in the future. So with this particular signal, rising bond yields, it means that, the market's more risk on, and we can probably take a little bit more risk, especially considering my second point, which is reopening economies. Once again, if you're following the news, you probably hear, news about, the governments around the world saying, hey, okay, we're going to reopen the economy. But why? Why are we opening economies? Dudes, if you've been living under a rock, you would have no idea what's been happening over the past couple of years. But if you're just like me, a normal person who's been watching the news and not living under a rock, you know that COVID-19 hit us last year. And because of that, lots of people were starting to work from home, businesses were closing, and some people, unfortunately, were not earning an income anymore. And so we have to open the economies because people need to, spend and stimulate the economy and basically grow their wealth. Right? But how are we going to look at it? So here's the thing. When it comes to opening economies again, we've got to be very, very careful, right? Because if we are just anyhow, or just open everything, COVID is just going to hit us all over again. But why are they opening economies today instead of, a year ago? Well, if you look at certain countries, the vaccination rates have been going up. Here in Singapore, we did cross the 80% vaccination quite recently, right, Adi?
Yeah, just about 80%. That's what was announced.
Yeah. And so that's a good thing for us. I'm certain we have to live with COVID in the long run, but as more and more people are getting vaccinated, it means more and more people are going back to work, going back to school, shopping malls are open, people can spend and start consuming. And on that note, what does that mean for you as an investor? Right? If the economies are opening, consumption is going up. That means all those big companies who are delicious when we look at their stock market prices and how they've been moving up, should be continuing to move up. But on that note too, you also have to be very, very aware that not every single company that did well over the past couple of years is going to be doing well in the future. For example, when people were stuck at home, working from home, things like Zoom, things like there was one, that cycling one, Peloton, was it? Yeah, it was Peloton. That's what I remember. They did well because people were stuck at home. But now that people are back to work and people are spending more, consuming more, you might start to see that some of the other stocks that were underperforming over the past couple of years may start to do well. But those that was doing well over the past couple of years may start coming down. So be very, very wary on that. And when we look at that, not every country is the same. Alhamdulillah, we're blessed to be here in sunny Singapore. We've got good vaccination rates, but it's not the same in every country. Yeah, the US is opening the economies. Yeah, they've got good vaccination rates. Some of the more developed countries have great vaccination rates. But let's look at the emerging markets within our region, especially Asia Pac. Malaysia, Indonesia, Thailand, India, and the Philippines, they're having a tough time. So what we want to look at is expect an uneven global recovery. Okay, so that's it from me. Adi has a few things to share. Adi, all yours.
Well, that's quite a bunch of stuff that you have just shared. So basically the most recent news is that the Federal Reserve, right, Afiq, is basically going to do tapering of the debt of the bond purchases. So that means in terms of monetary policy, they are going to cut the supply of money into the system so that at the end of the day, we do not go into an inflationary environment, because that's something worrying, right? Because if stuff gets too expensive, all at one go, then even businesses will have a problem of, catching up in terms of payments and all that kind of stuff. So at this point in time, they don't want that kind of environment, right, Afiq? But at the same time, they do not want to just cut the money supply and reduce rates, in a surprising way that would affect the market negatively, which in this case, we're talking about the stock market. So I think that it is quite a good move by the Fed to actually do things in a much more measured manner, right? So that things do not go out of hand and the stock market still can actually function in a much more balanced way. Yeah.
And
what do you think of that?
That's the key. You're absolutely right. We want balance. We don't want to shock the market. We don't want to. Like how many of you like it? Say, boom. We don't want that, right? And the Fed is absolutely aware that if they were gonna boo, it's gonna scare everyone, right? And we know what. Okay, so in school we learned that the markets are driven by numbers and fundamentals, and we learned that the market is rational. That was in school. But the moment we stepped out of school, the first thing we learned is the markets are irrational. Boo!
Yeah, I guess sentiments play a very major role in investors, how they take actions, and especially if it comes as a surprise, right? So as we know, even a surprise of a 0.1% change in interest rates or lesser than that could actually cause a lot of, basically investors getting jittery and, selling their stocks. And that's not good for everyone, because if everybody starts to exit at the same time, then the price would actually fall really badly, right?
Absolutely. We don't want another crash. But folks, if you know anything about what I do, that when there's a market downturn, it's always a buying opportunity, right? I mean, one of the most important things we always talk about is keeping some of your gunpowder dry. You got to keep some of your ammo. So Adi, what do you think of the next 6 months to a year? What should we do as investors?
Well, if you can see, first of all, let me just do a summary of what's been happening in 2020 and this year up to this point. We can see that stocks like pharmaceutical stocks like Moderna, Pfizer has actually been benefiting from this pandemic, basically due to the fact that they are selling vaccines, and of course they will actually gain more profits from those sales. And also we took a look also at stocks such as Zoom. However, Zoom from a high of around $600 have now dropped to about 300 plus, right? So there's some questions surrounding it right now. Will it still be relevant going into the future? And some people are saying, yes, it is still relevant, while others are saying that, well, it's relevant, but not so relevant. So that's actually causing the price to basically be volatile at this point. You know, it goes from 600, 300, and that's like, if you bought at those highs, you'll be like nearly 40 to 50% off, right? So
Crying. Crying.
yeah. And also, we can actually, moving forward, take a look at other sectors. Okay, technology sector has been actually benefiting from the pandemic, as everyone knows, because everyone's cooped up at home, and therefore, you know, they are using much more Netflix. You know, they're watching more Netflix. They're watching, and they are actually playing more games, mobile games, and you see, basically whatever that they can do from home, and you know, these are companies that basically benefited from the pandemic as well. Right. So, but I still think that the technology sector is still a good sector to look into, but it is a bit on the high side, the prices, and you might want to actually consider other sectors that are actually coming up and benefiting from this. What do you say, Afiq, just now? This uneven recovery and the opening of economies, right?
Yeah.
Yeah. So you might want to look at the shipping sector, for example. Right, because like there's one index that I always take a look at and it's a proxy to how the economy actually grows. You can take a look at the dry bulk index. Basically, it's about the prices of, you know, shipping and all that, whether if you're going to be shipping containers and all that. So is this index going up or down? So if in a growing economy, this index is supposed to be going up, right? If we are in a contracting economy, the dry bulk index will be actually going down. So at this point, with economies reopening, this index has been actually going up, right? So this sector, basically, if you're talking about one of the stocks which I've been looking at is Starbucks, basically one of the companies that might benefit from this. And yeah, there are several other companies shipping that is involved in the shipping industry. So, but you got to be careful, because we have several kind of services when related to shipping. You can be talking about shipping in terms of goods like containers and all that, and then you have another one, companies that deal in tankers. Yeah, so that is a bit more related to the oil industry and the demand of oil. So you got to differentiate between these two, for example. Yeah.
Yeah, and I saw a bit of news that was talking that the oil prices are coming back up. So that could be good news. But again, as always, do your own due diligence, folks. This is not a recommendation to invest.
Yeah, and talking about other sectors, you can look at the retail side as well. So on the retail side, people are now talking about Walmart as a company that might benefit from this reopening, and even sports companies, you know. One of them is what's the name of the company? Grade 5 Sports Company, GF Great Sports. There's one company that's basically, okay, hold on. Let me just check it down here.
Is it Great Sports Inc?
Okay, hold on. Let me check my details so that I do not give you the wrong information.
And folks, on that note, please always do your own due diligence. I mean, in the past 2 years, I have seen so many scams, you know, so many get rich quick schemes. People are telling, oh, blah, 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 this and that. Always verify the information. Of course, inshallah, we do our best to, you know, do our own due diligence before we share anything with you guys. But, you know, not everyone's like us.
Yeah, so yeah, it's called the Big Five Sporting Goods, and the short form is BGFV. And yeah, within that industry, we have also Dick's Sporting Goods Inc. Right, so that stock has been like flying. It's like, you know, during the last year's pandemic crash, it was around around $13, $14. Now it's at $140.
Hang on. Folks, if you're looking at it right now, the counter is called BGFV, Big Five Sporting Goods Corporation. And in March of 2020, on 6th of March, it was at 20th of March is at 89 cents.
Yeah.
Oh my God. And look at it today. $27.80 from less than $1 to almost $30.
That's a lot.
That's a lot. What? That's not a lot. That's an understatement.
That's wealth building to the max.
To the moon. But yeah,
Yeah.
so when it comes to all these, these are consumer goods, what do you think? Do you think with reopening economies, people are going to be buying more of these consumer goods?
Yeah, definitely. That's what I think. And as you can see, the stocks have already risen, right? And it's a matter of us actually looking at these opportunities and finding out for ourselves whether it's a good investment or not, or whether we want to actually participate in it, whether it has actually got a bit too high, or we can actually wait for a retracement. So these are the things that we also cover, right, I think, on our shows and on our videos. So yeah, do subscribe to our channel, and I guess you will actually be updated of all these things that we are sharing with you guys. And also, Afiq, there's another trend which I would like to just mention here is that, electric vehicles, right, are actually becoming much more popular. And I guess companies like Tesla, there's even a China company called NIO, and others that are actually, producing electric vehicles. And from what I understand, electric vehicles consume a lot of resources. And one of the resources which they actually consume is copper, right? So there are some investors out there who actually see this as an opportunity. They understand, they know that since this is the trend going forward, therefore the companies that actually deal in copper will actually be benefiting from this trend. What do you think of it?
I absolutely agree. I absolutely agree. So folks, if you're watching and you have no idea what we're talking about, now the bigger picture is commodities, right? So when we look at certain industries and certain trends, like what Adi mentioned, electric vehicles, what does an electric vehicle need other than electricity? It needs all the internal components, right? I think we talked about semiconductor shortage a couple of months back. But if you're looking at the increase in adoption in electronic vehicles specifically, what do they need? What are wires made of? The internal wiring, what is it made of? Is it made of gold, silver? No, it's made of copper, right? So this is where Adi is going. We were talking about, hey, with more EVs coming up, the demand for copper is going to go.
It's going to go up.
Yeah. So back to you,
so,
Adi.
right. Yeah, so copper moved to a record high, right? Basically, the price in May. COMEX futures reach about $4.89 per pound on the continuous futures contract. So, although we know that bull markets rarely move in straight lines and there could be corrections that could be severe as well, but this is something that you cannot actually, push aside, right? The fact that copper will be a resource that's going to be in demand. And if I can just share with you, actually Goldman Sachs, if you know the big bank in the US, stated earlier this year that copper is the new oil. They say there is no decarbonization without copper.
And so, on that note, explain a little bit, what do you mean by decarbonization? I mean, you and I will talk about it all the time, but to anyone watching us right now, decarbonization, what's that?
So in other words, Afiq, if we are going towards clean energy, using electric power and all that, then basically that's related to decarbonization. So a lot of these new technologies require copper. And as you have the countries, various countries now actually buying and selling carbon credits and that kind of stuff. So there's even money inside this particular situation here. But more on that later. I guess this is something else, but now we're talking about copper. So these are things that, that is going to the trend basically in the economies of the world, and the latest technologies are going to actually be needing a certain resource, right? Yeah. And if we are going to be addressing climate change, then we will be using more copper, in other words, in simple terms.
And that's the thing, folks. When we start looking at, and this is what I hope to give to everyone watching, like when we do our market outlooks and we talk about global views, we also want to look at what's going to be happening. We look at what's happening today. We try to forecast what's going to happen next week, next year, in the next decade, in the next 20 years. Because like it or not, we are living on this beautiful, beautiful world, and we've got to be really, really ready to be able to grow our wealth, right? Because let's face it, we want our money to be able to feed us when we can no longer feed ourselves. A quote that I love to use is, if you're not going to make your money work hard for you, you will forever work hard for your money. And so if you want to know how you can make your money work harder, halalinvestingnetwork.com. Follow us on Facebook, follow us on YouTube. Let us know in the comments below. Right? Give us a comment, or even just give us a thumbs up. Let us know that you like what we do. Tell us what are the things you want to learn. Tell us, what your thoughts are. And as always, subscribe and share. Adi, what do you have to say about that?
Yeah, just join us in our videos, right? If you want to hear the latest trends and tips, as well as good stuff that can actually make you money instead of taking money out of your pocket. So be with us. Myself and Afiq, we are always actually looking and reading, even before we sleep, we read articles, we keep on, going through tons of resources so that we can actually come up with those small little gold nuggets that we can share with you guys.
Absolutely. We do all the hard work so that you don't have to. Now, on that note, Adi, since you talked about, before we go to sleep, I tend not to read, business news, economy news, because it keeps me awake at night. We need bedtime stories. So for those of you who want bedtime stories, watch us on YouTube, watch us on Facebook, then you'll know what it means to fall asleep. This is Afiq, Chief Finance Jaffa Street Finance, co-founder at Halal Investing Network, having the time of my life doing this for you. And this is my good buddy,
RD, signing out from Halal Investing Network. Thank you very much for joining us today.
Assalamualaikum warahmatullahi wabarakatuh.